Alright guys, it's your cousin Dustin here. Here we go. We're going to look at the markets. It is June 19th, 2026. Here we go. The markets are closed today, but you know, we're going to look at a lot of different stuff, look at some stocks, see where things are at, see what's happening. Here we go. The Dow Jones is currently sitting at 51,564.7. It is up 0.14%. The S&P 500 is at 7,500.58. It is up 1.08%. The NASDAQ is at 26,517.93. It is up 1.91%. We've got the Qs at $740.62. They're up 2.51%. Gold is at $4,172.90. It's down 1.72%. Silver's at $65.38. It is down 2.13%. Crude oil's at $76.54. It is up 0.91% today. Bitcoin's at $63,221.91 a coin. It is up 0.52% today. The VIX is at 16.78. Dang it. The VIX is at 16.78. It is down 9% today. All right. We'll go to the heat map of the S&P 500 here. And this probably would have been yesterday, I'm guessing, these movements. So if you look at the last 4 hours, this is kind of interesting. Over the last one day, we've got this. And things have moved less, but some things have moved in the last 4 hours only. We got Dell down 4.19%. We've got Oracle down 1.27%. A lot of red. What's that? Lam Research down 1.71%. And that's just in the last 4 hours, guys. That's right here on Juneteenth. Tesla's up 1.34%. Broadcom's up 0.86%. Corning Incorporated is up 1.67%. And I'm thinking, yeah, it would have been up 11.13% over the past 11.13%. Pretty cool. Corning, I think that's what we'll look at. All right, Corning is currently sitting at 194.92. It was up 11.13% yesterday, and in the after hours up another 0.29%. So we're recording this on Juneteenth, so markets are closed today. Over the course of the last 5 days, it's up 2.72%. Over the last month, it's up 10.86%. Over the last 6 months, it's up 121.85%. That's Corning Incorporated, ticker symbol GLW. Year to date, it is up 122.61%. On a 1-year chart, it's up 286.59%. On a 5-year chart, it is up 403.67%. And on a maximum chart, it's up, this goes back to June 20th, 1986. It's up 3,450.46%, but that's not as much as I would have imagined. Corning pays a dividend of 0.57%. That's 28 cents a quarter. They have a PE ratio of 93.65, a 52-week high of $211.79, a 52-week low of $49.97, with an EPS of $2.08. They've got a market cap of $167.76 billion with 860.64 million shares outstanding and 67,000 employees. They last reported on April 28th, 2026. They got an EPS of 70 cents. That was a 1.21% beat of their 69% estimate. They missed on revenue by 3.77%. They were predicted to get $4.31 billion. They got 4.14. No bueno. We slide down to look at some of their past EPS and revenue here and their reports, and we've got a lot of misses, especially on the revenue side. And then when we get down here, we got misses on the EPS side. So they missed pretty consistently for whatever reason. Q1 2026, 3.77% miss on revenue. Q4 2025, 3.3%. Q3 of 2025, they missed by 3.2% on revenue. Q1 of 2025, they missed by 4.91% on revenue. Q4 of 2024, they missed by 7.15%. Then Q3 of 2024, they missed by 8.93%. And then they missed on EPS as well. All right. Oh, missers over here. They missed a lot. They missed a lot. Pretty crazy. All right. Interesting. So let's do this. Perspectives from across the web. Corning advanced significantly this month following a multi-billion-dollar Amazon partnership and AI data center demand. Analysts project continued growth through sentiments Corning advanced significantly this month following a multi-billion-dollar Amazon partnership and AI center demand. Analysts project continued growth, though sentiment suggests caution due to recent parabolic gains and extreme valuation multiples. The next quarter depends on successfully ramping solar production and maintaining high-margin optical sales to meet upgraded 2026 targets. The bullish view. Major hyperscale AI partnerships. Corning recently secured a multi-billion-dollar multi-year agreement with Amazon to supply optical fiber and connectivity for data center infrastructure. This follows similar significant deals with Meta and Nvidia, positioning the company as a foundational supplier for the physical AI computing backbone. Strong financial outperformance. Q1 2026 results exceeded expectations with core sales up 18% and core EPS growing 30% year over year. Management subsequently upgraded its Springboard plan, now targeting more than $4 billion in incremental annualized sales by the end of 2026 with a 20% operating margin. Expansion into photonics. The company is transitioning into silicon photonics and co-packaged optics to solve AI networking bottlenecks. Management targets photonics-related revenue of approximately $10 billion by 2030, transforming the business from a cyclical glass maker into a high-growth tech infrastructure provider. Neat. Here goes the bullish view. Stretch valuation and overextension. Following a surge of nearly 290% in 1 year, the trailing PE ratio has ballooned to approximately 90x. Analysts have recently downgraded the stock to hold or neutral, citing concerns that current prices already account for earnings expectations as far out as 2028. Operational hurdles in solar. Execution delays at a new solar wafer facility have forced an extended maintenance shutdown for equipment upgrades. This transition is expected to increase operational expenses by approximately $30 million in Q2 2026, creating short-term pressure on profit margins. Aggressive insider selling. Recent SEC filings in mid-June 2026 revealed that corporate executives liquidated over 160,000 shares worth more than $30.7 million. Such high-volume executive profit-taking near all-time highs has raised concerns about near-term upside potential and dampened some institutional confidence. Alright, here's some analyst ratings. So based on 11 analysts giving stock ratings to GLW in the past 3 months, we got 7 buys and 4 holds with 0 sells. Based on 11 Wall Street analysts offering 12-month price targets for GLW in the last 3 months, we've got the highest one at $228. That's 16.97% upside from here. Average is $205.11. That's a 5.23% upside from here. And the lowest one's $180. That's a 7.65% drop from here. Wendell Weeks. All right, there he is. See, this is what I like. I wish it did it just like this every single time, but it doesn't. Wendell P. Weeks is an American businessman serving as chairman, CEO, and president of Corning Incorporated. Joining Corning in 1983, he advanced through key roles before becoming CEO in 2005 and chairman in 2007. Weeks drove innovation in products like Gorilla Glass for the iPhone, expanded into life sciences and optical communications, and holds dozens of patents. He also serves as on Amazon's board and advocates for long-term values-driven growth. He advocates for long-term values-driven growth. There he is. Look at that guy. He looks pretty smart, don't he? So there you have it, guys. Corning Incorporated. Currently at $195.49. What do you guys think? Let me know what you think about Corning Incorporated, guys. It's your cousin Dustin. Like and subscribe. Thanks a lot. Alright. We're going to keep going, though, here on this Friday, Juneteenth video. I'm going to have to learn how to watch videos. With my microphone plugged up, I don't know how to get them to play so that I can hear them. I guess I could use my headphones. I guess that's probably what people do. Has to be. But then how you going to hear it? How y'all going to hear it? It don't make no damn sense. I don't know what I'm going to do. Oh, I don't know what I'm going to do. Alright, guys, we're here on CoinMarketCap now, and we're going to look at the top trending cryptos. All right, we're on CoinMarketCap. The top trending cryptos. We've got number one at S&P 500 tokenized ETF X stock. It's at $750.53. In the last hour, it's down 0.02%. Last 24 hours, it is down 0.1%. RE is at $0.9028, so a little over 90 cents. In the last hour, it is up 4.24%. In the last 24 hours, it's up 115.98%. SpaceX, one of these weird scam things, is at not even a cent. Not even close to a cent, really. In the last hour, it's up 0.04%. In the last 24 hours, it is up a lot of percents. Avalanche is at $5.88. In the last hour, it is down 1.14%. In the last 24 hours, it is down 6.34%. Biconomy is a little over 3 cents. It's at $0.03580. In the last hour, it's up 1.47%. In the last 24 hours, it is up 83.59%. Fascinating stuff. Interesting stuff. Neat stuff. All right. Now, I want to see something else. Russell 2000. Now, this is a different heat map. This is the Russell 2000 here. But I do think it'll be interesting because it's got more small caps. And I want to start looking into some more different small caps. So, like, what is this? Energizer Holdings. How fun is that? So check out this stock. Energizer Holdings, ticker symbol ENR, currently sitting at $21.41. Yesterday, it would have been up 7.76%. Like I said, it's Juneteenth today, so the markets are closed and it's down 0.51% in the after hours. So over the last 5 days, it is up 4.19%. Over the last month, it's up 32.59%. Over the last 6 months, it's up 8.63%. Year to date, it is up 8.2%. On a 1-year chart, it's up 8.52%. On a 5-year chart, it is down 49.41%. And on a maximum chart, it's down 38.51%. Energizer Holdings. The maximum chart goes back to June 12th, 2015. Wow. Fascinating stuff. So if we slide down, we've got a dividend of 5.58%. That's 30 cents a quarter. A PE ratio of 7.89. Whoa. 52-week high of $30.29. 52-week low of $15.75. An EPS of $2.73. With a market cap of $1.47 billion and 68.47 million shares outstanding with about 6,000 employees. Absolutely fascinating. Let's go down. Let's look at their earnings. So in the earnings, they reported on May 5th, 2026. They were predicted to get 47 cents of EPS. They got 94 cents. That's a 100.26% beat. But they missed on revenue. They were predicted to get $661.85 million. They got $643.30 million. That's a 2.8% miss. A miss. And we slide down. We look at their earnings from, going back. So in Q1 2026, they beat on EPS and they beat on earnings. They beat on EPS by 19.13%. They beat on earnings by 8.5%. But then in Q4, they missed on EPS by 9.76%. Q2 of 2025, they missed. Then they start missing on revenue. Down here in Q3 of 2024, they missed on revenue by 0.49%, and then in Q2 of 2024, they missed by 0.11%, And then in Q3 of 2023, they missed on both. So they miss sometimes. That's all you can really say. That's all you can really say about that. So, here we go. Let's go to their overview. We've got Energizer Holdings gained over 9% recently, buoyed by massive second quarter earnings beat and technical buy signals. However, analysts project limited upside due to persistent revenue declines and high debt. Project limited upside, okay. Sentiment suggests a neutral to modest outlook as the company balances improved profit margins against organic sales headwinds and macroeconomic tariff uncertainties. What? All right. The bullish view. Significant earnings outperformance. The company reported adjusted second quarter earnings of 94 cents a share, doubling the analyst consensus of 47 cents. This 100% surprise was driven by aggressive operational efficiency and a substantial $47.6 million tariff refund benefit, leading management to project full-year earnings at the high end of $3.30 to $3.60 range. Expansion of profit margins. Adjusted gross margins expanded by approximately 360 basis points year over year to 44.4% in the last quarter. This margin repair, supported by strategic pricing and internal cost-saving initiatives, has bolstered investor confidence despite softer consumer demand in the core battery and portable lighting segments. Commitment to debt reduction. Management has successfully reduced debt by over $100 million year to date while maintaining a steady quarterly dividend of 30 cents a share. Strong free cash flow generation representing over 7%. Over 7% of net sales supports ongoing deleveraging efforts and consistent capital returns to shareholders. The bearish view. Persistent organic revenue decline. Reported net sales on the second quarter fell 3% year over year to $643.3 million, missing Wall Street expectations. Organic sales saw a steeper decline of 5.5% as the company faced softer consumer demand in the United States and difficult year-over-year comparisons from prior high storm activity. Substantial leverage concerns. Despite recent debt payments, S&P Global recently revised the company's outlook to negative, citing concerns over high leverage. Projections suggest debt levels could remain near 6.3x by the end of 2026, creating potential financial stability risks if consumer spending volatility persists or input costs rise. Uncertain macroeconomic and tariff environment. While a recent tariff refund aided profits, ongoing uncertainty regarding future trade policies continues to cloud the long-term outlook. Analysts remain cautious as the company remains exposed to volatile commodity prices for critical inputs like lithium, zinc, and nickel, which could constrain future margin recovery. Energizer Holdings. Mark Levine. We go right to Energizer Holdings website. Very cool. The executive leadership. Mark Levine, President and Chief Executive Officer. We've got Mark as President and Chief Executive Officer of Energizer Holdings. He stepped into the role of CEO in January 2021 after serving in a variety of senior leadership positions throughout the business since 2010. Prior to his current role, Mark served as President and Chief Operating Officer since 2015. His previous role at Energizer included Vice President, General Counsel, and Corporate Secretary, as well as Vice President, Assistant General Counsel, and Corporate Secretary. Mark began his career at Bryan Cave Leighton Paisner in 1998, where he was a partner from 2007 to 2010, specializing in business and transactional counseling and mergers and acquisitions. Mark holds a bachelor's degree from the University of Notre Dame and law degree from St. Louis University. How fun is that? What does Energizer Holdings do differently from a stock market perspective? Answer in one paragraph. All right, from a stock market perspective, Energizer Holdings functions uniquely as a highly leveraged, deep value cash cow that behaves like a high yield income play wrapped in a defensive consumer staple shell. Unlike typical consumer staple peers that sport pristine balance sheets and high valuation multiples, Energizer carries a massive debt load with adjusted leveraging hovering above 6x, stemming from historical acquisitions which depress its stock price and forces it to trade at a deeply discounted forward PE ratio of roughly 6x. This unique financial structure sets up a sharp tug of war on Wall Street. Regular analysts remain highly cautious due to soft revenue growth and a negative debt outlook, while value investors are heavy insider buyers are drawn to its resilient, recession-proof battery and auto care segments, which continue to churn out over $200 million in annual free cash flow to sustain an exceptionally high dividend yield of over 6.5%. Now. The dividend is at 5.58% currently. I don't know why Gemini said that. Stupid ass AI. The clanker's got a ways to go. Quarterly dividend of 30 cents. Very interesting. So guys, what do we think about Energizer? Ticker symbol ENR. Energizer Holdings. It's your cousin Dustin. Like and subscribe. Thanks a lot. Let's just look at the heat map a little bit more. Like I said, this is the Russell 2000 here. So we've got this Credo Technology Group holding up 9.02% yesterday to sit at $271.32 currently. Cipher. This is in technology services sector. $29.19 a share, up 10.74% yesterday. Here's another one. Sezzle up 11.28% to $163.27. Here's another one over here in electronic technology. This one's at $328.67, up 15.41%. Yeah, we're going to start looking at this a lot more. ACM Research and Producer Manufacturing up 14.22% to $109.76. I mean, my goodness. Find one that's down. Here's one that's down. Maximus was down 6.13% to $55.67. Next, in Energy Minerals, this one's to $7.36, down 5.77%. No fun for that one. Here's one. Technology Services. This one's Innodata, INOD, to $95.30. It is down 6.85%. All right, I'm not going to sit here and read every single stock on the freaking Russell 2000. This is fascinating to me though, so I just haven't really looked at the Russell 2 too much, but I want to start looking at more small caps. I think this is a fun way to do it. So yeah, that's what we're going to do sometimes. Yeah. So it's your cousin Dustin. It's Juneteenth. Let me know what you guys think. If you think there's something I can do to improve the videos, you want me to check out a certain stock, here's another fun one. Look at this. As we go out, we've got Tango Therapeutics and Health Technology down 13.38% to $27.90. I just think it's fascinating to see these big moves like this. I don't know. It's just me. That's what I like. I think it's interesting. Another one. AAMI, Acadian Asset Management in the finance sector, down 9.15% to $75.16. Okay, it's your cousin Dustin, guys. Like and subscribe. Thanks a lot. That's enough.